Okay, I'll give you my analysis. What I see when I look at the charts, right? So I'll do the same one, Australian dollar. Mm. This on FXCM, it usually has the most furthest back data. This goes back to 1971. Not super required, but I normally like forex.com. There's less gaps on the slightly lower time frames, but FXCM is good too. Okay, so yeah, I hope you can hear me well enough. I have a bit of a cold and my ears are stuffy, terrible. So, okay, let's go to somewhere more recent. Let's see what happened in terms of structure. So we expanded up. This is a nice breaker. Okay, on the 12 month, you can see we came down into it and then expanded up into this gap here. Okay, and then now we started breaking down. We broke down below this breaker. You see, we kind of retesting at the same time, but there's more PD arrays here. So more recently, we expanded down and came into this gap in 2017, and then one more time in 2018. Stick out the high a bit, and then we drop down. Okay, so came into a gap. That's nice, and like I said, we like gaps where breakers, order blocks or breakers form. So I mean, straight away I noticed this. Okay, generally an order block, but when there's a candle beside it that's shorter than the middle candle, I consider that slightly more higher probability. You can see we actually come back and trade into that, and then we leave. Okay, not to say that it can't trade higher, but usually the bodies will respect this one. And where do we target? ERL, right? This is a yearly chart, so 200 pips, not too shabby. Okay, and of course you'd be on the lower time frames at the time, finding a good entry. Um, we take that out, we take the liquidity there, and we expand up again. Oh, this one's a big one. Okay, there's COVID, so a lot of there was a big manipulation. We came back up, and then we started to drop back down. So we don't have this is a 12-month chart. We don't have a 13 months, 24-month, 36-month chart. So we just work with what we have here. And okay, and now it looks like we are heading down based based on that. It looks like we're at least going to take down this low and low on this time frame and potentially make even lower lows. Let's go to 11 month. Okay, we got this gap here, order block and a gap. It's not like order block that got created after a gap. Okay, it's just an order block with a gap. So trade into that, we close down, we create another order block with a gap, same thing. Trade it up, take close down. So yeah, this close was fairly close to the low, but took out the external range liquidity. And this one here as well is the external range liquidity of this this order block, but it created more along the ways even on this time frame, such as the one here. Okay, because of this red candle down close, and it's nice that it made a higher high as well. Shows that it took liquidity there and it closed here. So now, the next logical point would be here, right? If we were going back in time. Yeah, check out this high and look at the type of body you closed. It makes sense to take out this low and this one that's so close to it as well in terms of, being efficient using and taking liquidity. So gap here on 11 month. We came into it once, and I wouldn't say it came and used this gap again, but it did come into this large wick, and there's probably some imbalances or something interesting on a lower time frame. Okay, so now we are zooming in, refining where price is likely not going to go. Where is it next, right? It's likely not going to go here. Um, stop. Okay, and it's likely going to. Okay, we already know what happens. It's likely going to go here. All right, so we I'm not going to put a stop loss here, obviously, and we're just working our way down the time frames. So 10 month, I don't see anything much, right? These bodies are just chopping back and forth. It's not useful. I'm just going to go straight down. 9 month, I don't see anything interesting too. Um, we just come back here and then we start expanding down. Sometimes the time frames don't always look good, and we just have to go to a different time frame. 8 month also don't look good. Okay, so I like this here. So the block, you trade up into it, take out this high, and then expand lower. Okay, this was 24. Okay, 7 month candle, which is still happening. So we include U.S. elections, things like that, where the wicks can do extra. Okay, it's U.S. elections once every 4 years. Why not go the extra mile? And of course, other things, wars, etc. 6 months. Okay, it's the low of this candle. It's not below here, but it's close enough. So I'm just slowly refining. This one looks ugly. Straight away, I can see. Okay. So 13 days for this 4 month candle. You see here, 13 days left. Let's see, we take out this low. We're awfully close. If we're fortunate enough to make equal lows and trade back up, and possibly trade back up, that's great. I think I would happily take a short there. 3 months also closes in 13 days. Yeah, you can use the candle open chart that I made to refer to for the monthly and hourly candles. So okay, this one doesn't look too clean. Yeah, this looks like an order block here, but we have this green candle and this consolidation here. 2 month, 2 month here, and you can see how we used it, right? We got that close. Like, okay, and we have this lows, lows, lows here. This took out this by a bit, but don't forget this is still relatively equal. They tend to come back. Okay, and then we see, oop, come down, we trade up, we trade down, we trade up again, and then we're following the order flow. Okay, in the 2nd month, yeah. Okay, now we're here. We're very low. 1 month. All right. I guess 1 month also. You have this order block. Okay, and don't forget you can cut through wicks as well. When you see wicks, you can also cut through them as confluence. This one comes near consequent encroachment of this mean threshold, whatever, midpoint of this wick. So expanding down. You have this breaker as well. It's more of a structural, slightly more structural breaker. We don't close below it, but we do trade up and trade down. So let's look at lower time frames. 3 weeks. Okay. Still expanding down. All right, we're just here now, right? Okay. So on this chart, yeah, I see this order block. Okay, we took out the liquidity here. These one low, two low, three low, relative equal lows. And now we're on a 2-week candle that closes in another week or so. Okay, so let's go to the weekly. Okay, weekly, nothing too clean. When you start to get on the weekly and stuff, sometimes you get more gaps on FXCM, so I like to use forex.com. 4, 3. Let's go down. 4, nothing. 3. Okay, let's switch to. I'm gonna switch to this chart. 4-day, 3-day. Oh. Okay, immediately things like this I see. Yeah, I like. Okay, gap. Traded through the gap, but still a gap, and then an order block slash breaker formed over here, and that's nice. Usually you can get a decently sustained move from there, and then you save up there, right? So now our stop loss was, don't know, I think, is it here, or I think maybe a lot higher, but now we can refine it, right? Depending where you are in price. If you're here, if price is here, then you can say this is safe, right? It came into the gap, create an order block. Why come up there again? Okay, makes no sense. Unless it took a large amount of liquidity, which it didn't. It broke structure here, traded back into this structural breaker as well. Okay, and then makes sense to come for the liquidity here. Doesn't make sense to go back up. 3-day. Okay, straight away things I see. This one, trade into it and trade down. Small one. 2-day, 1-day, 2-day ugly, 1-day. Okay, this one's nice. We trade up into it. We go a bit above and beyond into this relative imbalance. Okay, because there's only wicks there. Then we create this one. Short block, trade high into it, and then see how we don't break the highs, right? So we had a stop loss up here. We're still slowly narrowing it down, these order blocks. Okay. Now we took out this liquidity here. So times we can, we may be reversing. So it's always good to refer back to a higher time frame, but it's not too many gaps and stuff that is formed. On the daily, you can use this order block here, order block there. You take out this large pool of liquidity, and you're like, okay, this is an order block. I'm going to go all in short, and I'm going to target down here, or down here. You have to be kind of relative to the time frame you're looking at. Okay, so this took out the external range liquidity here. So at this point, yeah, we're moving down, and we're very low. We're very near the bottom. Don't try and catch too big of a move, right? It's better to stay on the lower time frames and find a possible scalp that can be taken. Look for pools of liquidity. Okay, some relative equal highs here that may be taken out. Yeah, sometimes you just gotta wait for something new. It's on the daily. Yeah, okay, we pointed that out. And yeah, and that's all I have for now. Yeah, so we should be coming to take out this low, right? But just be nimble. Stick to like the 2-week. Okay, maybe a 2-week gap forms. Might be a nice place to take an entry. That'll be okay, right? Because we trade it into here, and then we create this order block here. So technically, there shouldn't be no reason to come back up here, and then you counter check on a higher time frame. Is there a reason to come back up there? Okay, such an expansion down, 13 days for this month to close. So it'd be quite a breakaway gap. By all means, it can come back up into this small gap here. But we got to see type of close it has. And here we have the 2-week order block. Okay. And that should support price if it should come into here and then push lower. Okay, which would be somewhere around here. Let's go 2 week again. Yeah, so it could trade into this gap here, which would be somewhere in here. So you see this daily gap, daily order block. That doesn't mean that this would hold. We took this out. We took all this out. We can retrace, right? Just look at any. Just go back in time. Use the replay tool and see for yourself. You know, see the daily order block, but then this is like a back. This is a consolidation. Okay, why? Because we came engineering this liquidity here. So I think that definitely would be taken out this time as well. Okay, that's it. See you.